What's going on, crypto fam? Welcome back here to the channel. So JP Morgan's chief economist has revealed some interesting information about his forecast coming up for the Fed decision later this month in September. And in this video, I want to break down the kind of his thoughts, what could play out here as we roll along into September here. What's going to happen with the Feds? What exactly are they going to do with interest rates? And how will this impact crypto, right? That is a big question. And people are speculating at this point, but there's some good insight here. While the Fed is expected to cut rates to boost, obviously, the overall markets at large, should boost Bitcoin and altcoins as well, it is almost certain that a rate cut will be made right now here in September, and probably one or two more by the end of the year. So the dilemma here is whether to cut by 25 or 50 basis points. The JP Morgan economists argue that the Fed will cut interest rates by 50 basis points here in September. So this particular person likes a big rate cut right out of the gate here. First one, big bang. Here you go. Speaking on CNBC Squawk Box, JP Morgan chief economist Michael Feroli said the Fed should cut interest rates by 50 basis points at its September meeting. He said he believes the central bank's policy rate should be around 4%, which is 150 basis points lower than the current rate. So with that in mind, he said this: we think they have a good reason to accelerate the pace of rate cuts. If we wait until inflation returns to the 2% target, we'll probably be waiting too long. While inflation is still a little above the target, employment is probably running a little above what they think is consistent with full employment. Right now, you have risks from both employment and inflation, but you can always change your course of reductions, even if one of those risks materializes. According to the CME FedWatch tool, investors are pricing in not a 50, but a 25 basis point cut by the Fed in September at 57%. And they're giving a 50 basis point cut 43%. So it is kind of up in the air here. Do we get a 25% cut? Do we get a 50% cut? What will this mean, though, for the markets? What does this mean for us as investors? No matter what, this is going to be a positive down the line. I think this eventually brings more retail back into crypto, because if we can get inflation down to our target, retail money is going to have more money to invest, right? And that's really what we've been lacking in this market ever since Bitcoin ETFs have come out. We've had the institutional demand. That's not been the problem, right? But we're lacking the retail demand. We're lacking the new investors, and even the people who left, from last bull cycle, they really haven't come back into the fold yet, into the fray. So we're waiting for them to re-enter the market, and obviously new people with new adoption to come in. Here's another thing we're looking at, right, with the Fed rate decisions here. As it lines up with the election, what does the stock market look like as we head into early November? Are they going to prop up the markets here? I know September is going to be a little bit wonky, usually is, but then what? Are we going to get another interest rate hike right after there? Are we going to prop up these markets? Are then people going to be, oh my gosh, look at the markets now. It's time to get back into crypto. So much of this market is driven by FOMO. So much of this market is, a copycat league, if you will, right? You start to see a few people start talking about it. The ball gets rolling in the right direction. The economy's better. Oh my gosh, look at this. It's time to invest in risk on assets. We're just not there yet in this cycle, guys. And that's exciting for us because we have a great opportunity in front of us. It is the perfect opportunity to accumulate your favorite assets right now, because we have not seen that part of the market. Now, there's some people out there saying, well, Zach, what if that part of the market never comes, right? What if we just don't get a retail push in this type of market? What if the bear market hits without retail coming back into crypto? I don't think that's going to happen. I think we're going to get retail coming back. I think we're just in the early phases of this bull cycle. We saw a little bit of a pop in March or whatever. That was cute, but it didn't last very long, right? This is that consolidation pattern after the first little leg up, and the major move, I think, is still in the cards. I think it's going to happen in early 2025. Once we have more clarity with rate cuts, more clarity with who the president is, and we're able to clearly see the path ahead for the economy, getting inflation in check, that's where I think risk on assets will be back. crypto will be back. And we're saying all this and Bitcoin's still hanging in the balance right around 60K, right? It's not like it's like detrimental and like we're losing all kind of value and it's going to zero. We're still holding the line here at 60K, just waiting for this next big pop. So that's what's kind of going on in the macro, guys. But a 50 basis point hike would be big for the markets. I think that would actually give it a bigger jump than a 25 basis point hike. But it's not going to happen all at once. It's not going to be 1 basis point, 50 basis point hike, and then boom, the markets get sent to Valhalla. It's not going to happen just like that. But I think it definitely is a step in the right direction. It helps our cause moving forward. Appreciate you guys for watching. Enjoy your weekend. Peace out.